Hey, happy Monday, everybody. Tradecraft trading back again, and good day today. Lots was happening. There was just a lot of opportunities today. First, I want to show you a trade that I took that ended up being flat on AFL. Yeah, so AFL. Got into this trade. You can see right here, a little entry marker here. I like the VWAP and the 200 moving average working together, especially a wedge forming. Now this isn't a perfect wedge. Usually I like the VWAP to be moving up nice and smooth and the candles to be riding it. And then it gets to the 200 moving average, which is this green line, and it busts through. And you can see that it kind of did that. It got up here, busted up, came back down, and I said, you know what, I think it's going to use this as a support, and VWAP is right below, so I put my entry here. But then I just did not like these candles, and I got out 10 minutes later flat. So I didn't lose any money on it. But you look what happened later in the day, right? It came back down. This is my stop. I put this line here to show you. My stop was at 44.92, and I got in at around 45.07. So 45.07, 44.92, 15 cents. So if you're doing a risk to reward ratio of 2 to 1, that means my first target would be 37, second target 52, and then the next target 67. And look what happened. I got out, came back down. I started to feel better about myself because I'm like, oh, okay, so now it's going to reverse on the day. And then what happened? And it took off. Went up, hit my first target, went through my second target, and came pretty damn close to the third target. But I can't beat myself up about this because this wasn't an ideal situation. These are not tight candles. There's a lot of wicks and just bouncing around. It's not nice and smooth. I'll show you a good example of what's nice and smooth, what you really want to see throughout the day. But so I can't beat myself up because this was really just a just a profit save move. I just did not want to lose out, and so I didn't. But I didn't get anything out of it. So it really comes down to how much you want to risk. And on a trade like this, I usually am pretty careful to pull the trigger on an exit when it's not really nice and tight. And there's positives to that because you can get out before it hits your stop, or there's negatives when this happens. But either way, I didn't lose anything. So, but yeah, so this is another example of that wedge that I like. The VWAP moving up, volume weighted average price, and 200 moving average kind of flat and busting through it. I'll show you one where that did work today. I think it was, I can't remember which stock it was now. But I'll find it. I'll put it up there. A really good move today for something that hit my scanner on the VWAP scan, the VWAP 200 scan. So that did not work out. But this trade was a beaut. So this one I got in. This is, I'll show you the okay, so here's my yearly. I'll tighten this up so you can see this really well. So this is a daily chart, right? Each candle representing one day. You can see it kind of busted up yesterday, but then what happened today? It opened gapping down. So this hit my gap scan. I have a Trade Ideas scan that looks for gappers, and this gapped down about, not much, but, well, yeah, actually from the close it gapped down over 75 cents really. So big gap down. So when it started out here on the day, I took notice of it when it hit hit this scan. You can see there it is right there, still on the list. So I got in right here. Now, I was looking at, this is one where VWAP is kind of helpful. You can see it's below VWAP, kind of regresses to VWAP, then drops down. I took notice of it pretty much right here when it rejected VWAP again. But see, it's it's not really tight either. This is another example of not a very tight stock. But if you look at the movement on the 8 EMA, this is another 5-minute chart, and this is my 8 EMA and my 20 SMA moving averages. Look at how it obeys this 8 EMA, right? Drops down, comes back to it, and then kind of drops again. So I took notice of it right here when the 20 was coming close to the 8. I used that as support, and that's where I got in, right here, right? And I put my stop right at this pivot point. You see that little yellow mark at the high pivot point for this range? I put my stop right there at 1471. You can see the line I drew so you can see it. Got in here at about 1458. And look what happened. It dropped, went sideways a little, and then boom, dropped. And I got out right here, just above my first target, just because I wanted to exit everything and just be, just have a nice good trade today. So I got out at 1435. So basically a a nice move, 23 cents is perfect. That's what I needed, because then if you look what happens, it kind of based, it did hit my target, then it came back up, but now look what it's doing. If I had stayed in it, it would have been a nice 50-cent gain. Look, it's 14.08 already, and I got in at 14.58, so half a dollar. That's not too bad, not too bad. But I didn't hold on to any shares because I just wanted to get out here. But this is the kind of stock where if you're starting out day trading, this is what you want to look for. Gappers are one of the big ones, because that means, especially during earnings seasons, you're going to see a lot of stocks gapping. They're going to start on the day gapping down or gapping up. I particularly like the shorts, because I feel like it's easier to stocks move down quicker for the most part. If a stock is going to get hurt, it's going to move down. People are just exiting it because they know, if they were in it long term for a long term position, it's not looking good if it gaps down like this. So I love these for if you're starting out day trading. You could just trade these. Just look for stocks that are gapping on the day, maybe like 50 cents to $1, and you can put a trade idea scan together. If you don't have trade ideas, highly recommend it. So, but it's obeying this 8 EMA, right? It's riding that down. So you can get in anywhere around here and just put your stop nice and tight, so you don't have to risk much. 14.58, I put my stop 14.71. That's not even 15 cents. So you're not even risking that much. And then you just use that as your guide, and it goes down, and see how it kind of crossed above it here, but it was still having a tough time. That's when I referred to this chart, which is 15-minute candles, and this is my 10 EMA on a 15-minute chart. Look how it came back, boom, drop, up, drop, and then it came back down. So if you're willing to put a bigger stop on it, you can kind of ride that one, move your stop down as it goes. Again, if I had held on to more shares here, I would have probably waited for it to hit that EMA and then maybe gotten out. But look what happens after. That's just great. So these are the ones, because here's the thing. The SPY, if you look at the SPY today, SPY has been booming, right? But that stock was not. It was dropping, which means it is an alpha predator stock. It means it's moving on its own. It is not obeying the market. So you know that it's going to be moving. So if you see it moving down like that, and no matter the SPY's moving up, you know that you don't have to worry about what the market is doing, and you know that the retail traders are in control and they're pushing it down, right? So those are high percentage trades that you can make, especially starting out day trading. Just look for stocks gapping and are alpha stocks. They're not moving with the market. They're moving on their own. And this was moving down, so I shorted it and it worked out pretty well. This wasn't so bad. This is kind of a wedge stock, but this is more of a opening range breakout. You see how the stock started here, dropping on the day, and then it got back to its opening, right? This is a 15-minute range. This is my opening 30-minute range. If you look from here to here, you have a line here, a line here, and then what does it do? Once it busts above that opening range, look what's right here. Oh, hey, our friend, the 200 moving average again. So it's above the opening range, and then it's above the 200 moving average. I would have gotten in, if I had been paying attention to this, about right here, 15.50, right? Put a stop maybe around 15.30, or maybe just right here, 15.38. Not even it's not even really 20 cents. And then look what happens from 15.55, if you had gotten in right here, all the way up to 16.39, so almost a full dollar. And nice and tight candles. This is a beautiful pattern right here. So yeah, those are the ones I'm looking for. And the good trade of the day, SEM, it did what I needed it to do, and I got out when I wanted to. If I'd held on, it might have been you'd have to hold on for a long time for this to get down to where you wanted it. But if you had that kind of patience, then you would have gotten rewarded. And then the one that did not work out, not only it worked out, I just didn't stay in it, was this. But you can't beat yourself up if you get out, because you just don't like the way it looks, especially if it doesn't fit that nice tight candle pattern. And for me, it didn't work out, but I didn't lose anything, so it wasn't bad. So that's it. So hopefully we'll be back tomorrow with another review. If you have any questions about day trading, how to get into day trading, and that's it. So I'll be back tomorrow, and hopefully have another set of trades to show you. All right, take it.